Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined by Justin Nielsen. Well, it was looking like a pretty good day for the stock market, but we were reminded once again that sellers are still around. And before we get into today's market action, let me first throw it over to Justin, who found, as usual, three stocks to watch.
Yeah, so we'll take a look at some of the ones that were at least closing in the upper part of their ranges. A lot of stocks gave up a lot of ground today, the gains that they had. So we'll take a look at Jabil. Jabil? Jabil?
Jabil.
Yeah, I think
Jabil.
that's how it's
Yep.
pronounced. Ticker symbol JBL on that one. Also in the apparel and shoes area, Skechers, SKX is the ticker symbol on that one. And over in the semiconductors, Lattice Semiconductor, LSCC.
All right. Well, three quality names there. Let's start by looking at the market here. We'll start by looking at a chart of the Nasdaq Composite. Justin, the Nasdaq got up close to its 50-day moving average. I think I saw an intraday gain of 2.2%, but by the close, that gain faded pretty badly, only up 0.6%. Now, we got that sign of strength that we wanted to see in the market on Friday, and what do you make of today's action?
Well, I mean, it doesn't have to go up every day, and the Nasdaq Composite certainly seemed to be the leading index. It was holding the most gains. A lot of interesting, action in the tech area. We'll go into some of those sector funds in a little bit. But again, the fact that we're still below that 50-day moving average line with potential resistance there means we've got some work to do. And it's not just there. The S&P 500, of course, that did get above its 50-day moving average line, but it closed below it, so it's still a little bit of a on shaky ground. That's always the case when you have a new rally. One day does not a rally make. We did get the follow through day last week on Friday, which was good, but now we have to see a follow up of gains that can be held, not not gains that are made and then given up.
Yeah, and looking at the S&P 500, it had an intraday gain of 1.4%. That actually ended lower by right around 0.1%. But you can see that reversal made a nice move above the 50-day moving average. Seemed to be on its way to the 200-day line
Mhm.
near the 4,000 level, but sellers come in and knocked the S&P 500 near its lows for the session. And let's take a look at the Dow, which showed similar price action today. It actually, lagged down 0.3% for the day, but a similar reversal that we saw in the rest of the major stock indexes.
Right. At least it's holding above its moving averages, but it certainly was the laggard the entire day. That wasn't just at the end. When the Nasdaq was up over 2%, I think the Dow Jones Industrial Average was only up a 0.5%. So it felt like there might have been a little bit of sector rotation since the Dow had been getting the most attention, the most love from investors recently. So that certainly didn't seem like it was the case today. So we'll see. Again, when you have a day here and a day there, it's hard to make too much of a judgment from that. What we really need to see is this trend something that can last, and that's going to require a few days. We should also mention, look, we've been having a lot of the economic data news that's been kind of tossing us to and fro, and we've got another big one this week. The CPI report is coming out on Thursday, and that is a very heavily watched one by investors, the Fed, to kind of determine, hey, is the Fed's action so far having an impact on inflation? So we'll be looking for the latest reading on that.
Yeah, that's a big report on Thursday. Like you said, finally, let's just take a look at the iShares Russell 2000 ETF, the barometer of small cap stocks. Came right up to the 50-day moving average, got turned away, so we ended. The IWM ended with a gain of about 0.2%. Now, Justin, you've got a nice list of ETFs, but let's take a quick look at that 10-year Treasury yield, because this is really starting to look almost broken.
Yeah.
So yields were down sharply again today. You can see it. It moved above the 50-day moving average briefly, but boy, just sellers have been in control, including Friday when we had that big drop in the yield amid pretty bullish gains for the stock market.
Yeah, so actually in this case it's the buyer of bonds that are in control, right? Because we have the inverse relationship between the yields and the buying of bonds. So when you see the yields going down, that means that there's more bond buying. So yeah, this is something that a lot of people think of as, if the rates are going to be pushed down, that's something that can help growth. But so far, again, the jury's out on this one. It's certainly kind of showing a mixed message with what happened today. Now, the other thing that is a piece of the equation here is sometimes looking at the different dates of bonds. So the 2-year, for instance, a lot of people have been watching that because of that inverted yield curve. Uh, it's a very strong signal of recession to come. It doesn't happen immediately, but looking between the gap of the 2-year and the 10-year yield, when you see the shorter term with higher yields than the longer term, that is a warning sign, and that's what we've been seeing for quite a while.
Yeah, most definitely. All right, well, let's turn our attention to some ETFs. We'll start with XLK. XLK, an ETF to watch here. Why do you want to talk about this one today? Well, technology ETF,
Yes.
and yeah.
Yeah, exactly. So, two areas that had been the most beaten down were the tech and the consumer discretionary. So that's XLK that we're looking at right here, that we can see got up to its 50-day moving average line, got turned away. XLY is the consumer discretionary, and that's kind of showing a similar story. It was very strong earlier, but it still hasn't been able to cross that 50-day moving average line. By contrast, you've got the industrial sector, XLI. That one has been the one that's been looking much stronger. Looks very similar to the Dow Jones Industrial Average, where it's above that 50-day moving average line, above the 21-day moving average line. So looking much stronger there. And even though that was lagging today, it's still the one that's in the better position. So again, we'll have to see, is there a rotation truly happening here, where some of the areas that weren't showing as much strength are going to take over, or is it potentially that we're going to be back to kind of the same old, where some of these breakouts, some of this strength is not lasting, and we're going to have to kind of determine where can we find that strength. So again, one day isn't going to give us too clear of a picture, but we'll have to be looking at it day by day to get a real good sense of whether or not there's some sector rotation here.
Well, when the Nasdaq was up 2% at one point today, a lot of the semiconductor stocks were doing the heavy lifting. So we'll take a look at very popular semiconductor ETF, the VanEck Semiconductor ETF. That's SMH, and here, pretty clear resistance here at the 200-day moving average.
Yeah, so got above that 50-day moving average line on Friday, and there we are hitting that 200-day moving average line. Now, it's important to note that on the semiconductors, they don't all look like this. There's some semiconductors out there that look much, much stronger, and we'll be taking a look at one of those. So it really helps, when you're looking at a sector and an ETF, to do some digging down underneath to separate out what areas are showing strength, what areas are showing weakness, and for us, at least, we tend to go with the strength.
All right. Well, sounds good. There's a rundown of some ETFs in the news today, and let's start by talking about some individual stocks. Electronic contract manufacturer Jabil. I was going to say Jabil Circuit. I think that was its old name, but
Yeah,
now
the
it's
old
just
name, right?
yeah. So now it's just JBL,
Yeah.
and
And
here's
that's no longer Apple Computer, right?
that's
You got to
right.
remember
That's
the new
right.
names.
No, I like
Um,
the theme today of finding stocks that actually were able to hold gains, because that was really the exception, not the rule today. But J Bill's looking pretty good here.
Yeah, and one of the things that I'll do in MarketSmith is I create kind of a custom column layout, and I'll put in the closing range for some of my lists, and that kind of helps me sort and tell which stocks are the ones that are holding the gains best. And Jabil, now this is one that you brought up during IBD Live. You ended the show on this note, and whereas a lot of other stocks gave up a lot of ground. I mean, just look at SMCI as one example in the tech area. Jabil was, it closed strong. It held its gains throughout and really was not willing to give those up. So when you're looking for stocks, you want to see more of the Jabils and less of the SMCIs.
Yeah, definitely. And with Jabil, the other thing it has going for it, this contract manufacturing industry group, currently ranked way up, number
Yes.
11 out of 197 groups. And we'll just swing over and look at a weekly chart for Jabil because you got a pretty nice technical setup here. I particularly like how the stock last week, went down to hit a low, but then closed all the way up near its high for the week. So there was some support for the stock last week, and it extended gains today above the 10-week moving average. This one is at least a story right now saying it may want to go higher, but it's going to need a healthy market to do so.
Yeah,
Let's move
those
on.
reversal weeks, I will say you're absolutely right, Ken. Last week, when you see those reversal weeks where it's kind of challenging lows, but it closes near the top of the range, that's definitely something that gives you a nice clue. You expect a lot of times for the week following to kind of continuation of the strength that it ended with. So we certainly got that with Jabil today. It was able to cross above its 50-day moving average line, and there was some volume behind it. It was also a little bit tricky. A lot of stocks that were looking pretty strong today just didn't have volume, and I'm talking about half of their average volume. So Jabil definitely fit the bill in terms of having volume along with the move.
Jabil fit the bill. I like that. And also, very strong breadth of leadership in this industry group. If you go
Yes.
to the weekly chart at Market Smith, you can see all the stocks here with relative strength ratings of 94, 95, 96. So whenever an industry group is moving, like the electronics contract manufacturing group, you want to see broad-based strength, and you do have it here. All right, let's move on to footwear makers. There's a lot of footwear makers working out there. Deckers has been acting well. You have
Hmm.
Crocs that's been acting well. But you wanted to talk about another pretty good performer here, Skechers, SKX.
Yeah, so I mean, if you look at this one now, arguably this is a little bit extended. If you look at this versus the 21-day moving average line, it's already like about 8% above its 21-day line, and from its 50-day line, it's about 14% above that 50-day line. So probably a little bit extended here, but I think it's worth watching a lot of these because sometimes they will give you, you know. Uh, Other opportunities. And what I liked about this is here again, we have a case where this is a stock that closed near the top of its range for the day, and it had some volume behind the move. This was, very high volume compared to recent. Now, granted, I know that we had holiday action happening, and so we didn't have as much volume in a lot of stocks. But the fact that this got well above average, on the move, and it was a decent move. Well, it was up to 2.6%, 2.7%. So again, possibly a little bit extended, but I think this whole group is still showing some strength. And it's not just the apparel, shoes, and related manufacturing. Another group that we've been also looking at is the retail apparel, shoes, and
Mm-hmm,
stuff. So
mm-hmm.
retail has certainly been a little bit fragmented. In the news today, you mentioned a number of retailers that were kind of showing some weakness that were guiding lower, and then there were the others that were doing well. So kind of like the semiconductors, you really have to kind of take them on a case by case basis because they're not all doing the same thing. That you're definitely getting your wheat from your chaff.
The Skechers is an interesting situation. We've seen a lot of this lately. I'm going to go back to the daily chart for Skechers, and here, what you have, what looks like a legitimate alternate pivot point here of 44.34. In other words, if you didn't buy at 41.30, that came close to flashing a sell signal. It looks like from the 41.30, but then it crossed an alternate entry of 44.34. That pivot point there, but yet you're looking at a stock that to the eye looks extended from the 21-day line and pretty extended from the 50-day line as well. So what do you do when you have a stock that looks extended from some moving averages but is still sitting pretty close to kind of a pivot or a buy area?
Well, there's two things you can do. When you have a higher risk like that, if you still want to make the trade, then you just have to adjust your position size because a lot of times what we're looking at is what is our risk to our portfolio. So you've got that lever to work with. If there's a higher risk, you just go with a lower position size to make sure that you're not taking too big of a hit to your portfolio if the stock fails. So that's one way you can do. The other is you can just wait and see if there's another opportunity. One of the things
Mm-hmm.
that's been a little bit tricky in this market is that a lot of times these breakouts have been leading to fake outs and shakeouts. And so that might be changing this time, but so far we need a little bit more evidence. So for a lot of us, we haven't been buying on the strength as much as we have been buying on these pullbacks to moving average lines. Stocks that are in uptrends. We're not trying to bottom fish, these beaten down names like Peloton and stuff like that. We're looking for stocks that are in uptrends that are pulling back, to moving average lines and then getting them on bounces when they show strength off of those moving average lines. So that's another way to be playing these, and you can just be waiting, because these pullbacks inevitably come. And if you're patient and watching these stocks, don't let them fall off your radar. You can be right there when the next opportunity comes.
Absolutely true. Absolutely true. All right. Well, let's take a look at. I believe Lattice is a stock that we do have on the leaderboard watch list, and
Right.
here's a stock that tried to break out from a cup with handle base, hit a high of 76.47, but then they just did not have the market helping it one bit, and then it fell sharply to its 50-day moving average. Now, when you get a drop like this down to the 50-day line after a failed breakout, I mean, do you buy the bounce off the 50-day, or how do you handle this? Because it looks like the 50-day is far below, the prior buy area. You do have an alternate entry here of 76.47, but LSCC still has a ways to go to get up there. But I mean, is this buyable because it's finding support at the 50-day right now?
I think so. I think that the fact that we got that support at the 50-day moving average line, again, this is where we've been kind of focusing our attention a little bit more. Now, that was a little bit of a steep drop, admittedly, but it really just kind of was contained by the 50-day line, and that's a positive. Now, this is one, we were showing some great examples where the volume really came in strong. This is one where good price action, but where was the volume? This was
Yeah.
one of those that I was talking about where it was half its average. You can see negative 50% in that little spot at the top there for the volume percent change. So that's telling you that there wasn't much volume behind here, and that can be a little worrisome. A lot of stocks have been moving up anyway, but that's something that we usually like to see, that proof point that the institutional investors, the big money, are behind you. And so far, that hasn't been apparent on this bounce. So
Yeah.
you don't have to get it necessarily on the day, but you'd like to see it around there.
Weak volume often makes for a weak foundation for the stock, and
Right.
so you've got LSCC finding support at the 50-day, like you said, but like a lot of other stocks, just waiting for volume to come in, and still hasn't happened yet. But we can swing over to the weekly chart and take a look at Lattice, and you can see it's just a nice big base taking shape. You could still argue it's just a big cup with handle base, and we'll keep an eye for it to top this alternate pivot right in this area here. So still a lot
certainly.
of
Well, one of the things I was going to say is what I really like to see is when you have a deep, long base like that, and this was almost a 50% depth to the base. I really like how tight it has started acting since this most recent base. Yes, it was a failed breakout, but the fact that it was really didn't give up much ground in this handle, I think that's a positive. I mean, the handle looks like it was only about well, once it got all the way down to the 50-day moving average line, certainly a lot tighter than that previous action where it was down almost 50%. So if it can maintain itself there, that's kind of giving you a little bit of a stronger foundation of a tight area that you can work from.
And what's impressive here too is you had a lot of volume here as the stock initially
Yes.
broke out of this, and then the pullback has been in pretty light volume. So waiting for upside volume to come into the stock, but Lattice definitely a good one for the watch list. All right, well that'll do it for today's show. Justin, thanks as always for your insight. Appreciate it very much. We will be back tomorrow, or I'm not. The schedule's been so crazy lately. I know.
Yeah. It's supposed to be Ed and Allie tomorrow.
It's supposed to be Ed and Allie tomorrow for the Stock
so,
Market Today video. So we'll
yeah.
see. We'll see how that goes. Until then, we will be back tomorrow morning for another edition of IBD Live. And if you haven't checked out the hour and a half show that starts just before the market open, you can go to investors.com/IBD Live, where we just talk about the market health. We talk about actionable stocks if we see them, and we just do it real time. So check out IBD Live at investors.com/IBD Live for a free trial. You can check it out for 2 weeks. And again, thanks very much for joining us today. We'll see you back here tomorrow.